This is Siddharth Alwalia. Welcome to the 100x Entrepreneur Podcast. This episode is brought to you by Prime Venture Partners, an early stage VC fund led by Amit Somani, Shripati Acharya, and Sanjay Swami. Prime is often the first institutional investor in category creating tech startups in fintech, SaaS, healthcare, and education, such as MyGate, Neo, and Reco. To know more about Prime, visit primevp.in. Today I have with us Nikhil Kapur. Nikhil is a partner with Strive Ventures, and Nikhil has also been a founder of a company called TommyJams, which is a profitable company and has over 10,000 artists. Nikhil also writes his views on tech at grayscale.vc. Welcome to the podcast, Nikhil.
Thanks for that. Pleasure to be here.
And thank you so much, Nikhil, for listening to 100x Entrepreneur podcast and sharing about in your blog.
Most welcome. Yeah, I'm an avid listener, so had to share it.
So, Nikhil, our today's discussion will be, around your favorite topic, SaaS. So, tell us about the portfolio companies from India and SEA, which you invested in or were the lead partner in SaaS.
Yeah, thanks. I'll go into that. So, essentially, so that within our fund, we focus on two kinds of SaaS investments in these markets. So, firstly, we're an Asia-wide VC, so we invest across Japan, Southeast Asia, and India. One of the very few VCs who are sort of doing this from the same team across multiple markets. And that gives us a very good sort of bird's eye view into all of these markets and sort of helps us understand where technology is moving, right? So based on this, we came up with sort of two buckets of thesis within the Asian markets. And the first one is what we call the global SaaS market, right? And these are your typical SaaS companies that are serving the US market or European market or even Asian market, but sort of starting from a city in Asia, could be Chennai, could be Bangalore, could be Singapore, right? And within this bucket, I've led investments in Indian companies such as HASURA and Test Sigma, and even Southeast Asian companies like Saleswhale and Healint. And happy to go into more details about some of these companies. But before we go in there, just mentioning the second bucket, which is as important as the first one, and probably a bit more overlooked by most VCs in this part of the world. And this bucket is what we call local SaaS. So for within the Indian market, this would be sort of the India SaaS, the true local India SaaS opportunity. And similarly, Indonesia SaaS or any other emerging market that we are covering in these regions, right? And within this bucket, like within India, we have led seed investments in companies like Classplus, MedTrail, Build Supply, all of these companies that we led the seed round, and we were sort of the first or one of the first institutional investors in these companies. And yeah, these are some of the investments that I personally have led in these markets.
So Nikhil, before we go dive into, uh, you know, the companies and the market, so you are Nikhil Kapoor. Do you enjoy, like, is there in VC a certain, Kapoor clan like Mitch Kapoor, Nikhil Kapoor, which you enjoy, like being a like Bollywood Kapoor?
I wish that there was a Kapoor fraternity, but unfortunately, there's none. But yeah, if you do know a lot more, then maybe we should start like a WhatsApp group or something.
I can start a Punjabi VC WhatsApp group because I'm also
That
Ahluwalia.
yeah, that we should definitely do. Like bring in Tej from Fosun,
Yeah.
and like yeah, we can definitely have our own little WhatsApp group.
And now, Nikhil, on some serious part, right? How do you categorize these various opportunities? Because there is, Japan SaaS opportunity, and I think you have a very small team. You have Indonesia SaaS opportunity, and you have India SaaS opportunity.
Yeah.
So, if you can share some details, what's the typical ACV as in India for, let's say, a company like Class Plus compared to Indonesia and Japan? and how do you tend to focus, because it cannot be like equal focus on each market for same time.
Yeah, that's a tough one, right? Like I think most VCs tend to focus on just one market and sort of go deeper into it, and I think that's been sort of the traditional approach towards VC. I think when we started this fund, the two managing partners that are based in Japan, and they started the fund, they always had this vision of being a broader sort of Asia fund, and I think that attracted the a similar set of people, including me, who joined them on this vision, right? And I think we really enjoy being this sort of cross-border VC. We like sort of connecting dots from different markets. It definitely comes with its own strengths, where we can sort of leverage on knowledge from each market and sort of apply it to another market, or leverage our networks across these multiple markets. But it also comes with its weaknesses, right? And one of them is this exact problem that you mentioned, how to focus on so many markets at the same time, right? I think one thing that we have done is we've been disciplined. We've sort of focused on a few sectors, as you can see, like we are focused on SaaS, and that gives us the opportunity to not get confused or not get strayed away, and start looking at the next I don't know, food delivery company, and so on and so forth, right? Like we tend to focus on just that core vertical that we are looking at, right? So that definitely helps. The second is, I think we tend to be very different in our workings internally, compared to most VCs. So most VCs, they have this approach of a platform approach, right? Like where there is like a hierarchy. There's a partner, then there's principal, then a senior associate, analyst. Like there's a whole pyramid structure, and deals are bubbling up sort of from the bottom to the top, right? And that's how most VCs operate. And then there's a separate, mostly a team which is handling marketing, somebody handling tech, somebody handling some part as part of the platform, right? What we've done is we've sort of twisted that model, and we've created internally what I call full stack VCs. So we we go sort of play the role, each one of us, all the way from a partner to an analyst to even like administration of the fund, completely full stack, one person doing pretty much everything within their core area of focus or within their vertical. So how this helps us is like, I'm the one who's usually scouting people on LinkedIn and reaching out to them. And then I'm the one who's sort of doing that first meeting. And I'm the one who's doing the second meeting. And I'm the one who's in the end sort of taking a call on whether we should go ahead with this investment or not. So this helps us sort of minimize the amount of communication required between multiple stakeholders, right? And this way, that said, like we definitely involve each other in sort of our decision making, but we tend to operate very much full stack with a lot of independence to each person, and each one doing sort of their own diligence, research, scouting, everything. Right? It's a lot of work, I would say, for one person, but we're all young in the team, so that we have the sort of advantage of having that extra energy during this phase of our life, right? And happy to answer the other question that you had regarding the ACV side also. But if you think
Yeah.
that, yeah, okay. So on the ACV side, Siddharth, so I think let me first say that within there's a, as I mentioned, the global SaaS bucket, and there's the local SaaS bucket that we look at. In the local SaaS bucket, actually we're not really thinking of monetizing these companies via a typical SaaS subscription model, right? So even though these companies are providing a software as a service, they might not necessarily have a pure subscription only model for their business, right? And what these companies,
Can you share examples? Yeah.
yeah, so actually, if you look at a company like Classplus, right? Most people, now have started to know about Classplus. The company is growing very well. They're definitely the category leader. They have more than 5,000 coaching institutes now using their platform across India. It's been built in less than 2 years, right? So really growing fast, right? And of course the COVID tailwinds are helping them, right now. But if you look at that company closely, most people think that it's a SaaS company. They go and sell subscription to coaching institutes, and that's their business model, and that's it. But what people miss is actually one of the biggest business models is selling content through their platform. So what they go and do is they provide this SaaS platform to these coaching institutes. They digitize the whole institute. They bring all the students on the platform. They bring all the teachers on the platform, right? And the teachers actually go and bring the students. So there's zero CAC to bring these students onto the platform. It's a completely zero CAC model, except for getting the teacher onto the platform in the first place, which, by the way, the teacher pays for. So, it gets paid for within the first transaction itself. So it's like, again, zero CAC in that sense, right? Because you make money from day one. So once the teachers and students are on the platform, then the teachers actually go and upload their content on the platform. And they sell their content to their students as well as students who they might not have ever reached in the past before. But now, suddenly, with the power of a mobile app, as simple as a mobile app, they can now reach any nook and corner of the country, right? Even international students can go and sort of look at their content, view their content, read their content, and then sort of buy the content. And Classplus actually enables these transactions on their platform, and they charge a commission on it. And this commission business model is actually as big as the subscription business model that they already have, and is growing probably 10 times faster than the subscription business model. So at scale, we expect Classplus to be making maybe 10 million, $20 million on this subscription business model. But what we really expect them to do is to go and make like $1 billion of transactions happen through their platform, and then make maybe a few percentage commission on this, and be a 200-300 million dollar revenue business, right? This is not a new business model. If you go and look at Shopify, they have applied the exact same model, and they're so successful right now. They're more than $100 billion in market cap now, right? And again, COVID tailwinds gave them that sort of push as well in the last few months. So very similar business model, and I think it's very, very relevant for these emerging markets.
And you have the same for Midtrail and other companies in your portfolio.
Yeah, same, right? So Metrail is actually a company which is in the health tech space, and they, just like Classplus builds this SaaS for coaching institutes. Metrail is a doctor first company, so they build a similar sort of platform for doctors to manage their clinic, but more importantly, to digitize that prescription that the doctor is writing for the patient. And traditionally, people have tried to take this sort of market by taking a very SaaS-based approach and saying, you know what, we're going to give this EMR digitization software to the doctor, and the doctor will pay us some $2,000, $4,000 a year, and that's how we're going to make money. Now, what Metrail has done is, like, they've really brought down the cost for this kind of a product, thanks to machine learning. And they go and give this to the doctors, and they say, you don't have to pay us a lot of money for this. It's very cheap. It becomes almost a no-brainer for you to adopt this. But because this prescription gets digitized and comes onto our platform, we are going to layer services on top of this, and you as a doctor can actually make money on it while we make money on it. So you focus on providing the best of quality of care to your patients, and you ensure that the patient also gets the prescription fulfilled right at your clinic, so they don't have to go around and look for these medicines in the market, or even bother about going to an online platform and sort of ordering there and waiting for like 5 days to get the medicine, right? Like, we can bring you the power of the same pricing right there in your clinic. So that's something that they've done, and they again have this sort of uh, bi uh, bipartite sort of business model where they make money on subscription, but the real money that they make is on the transactions that get enabled through the core of this platform.
So they have in-house pharmacies at these doctor clinics, which are
Yes,
material pharmacies.
yeah, powered completely by Material. It's all automated, completely automated inventory management.
Fantastic. And I think the build your third company in this in India, Build Supply, also follows the same in construction market.
Yes, exactly. Very similar model focused on the construction market, on the prop tech market, basically providing a similar software for people to manage, like sort of like an ERP, to manage their whole inventory as well as construction project on the build supply platform. So it's both being used by contractors as well as real estate developers, and they have big clients like Godrej, Godrej Homes. They have Puravankara, they have Vatika, they have Embassy, they have Emaar, and even DLF. And these guys are using the platform to sort of manage their construction projects. And similarly, they have the mid-tier sort of contractors who then go and provide these services to big developers, also using a similar platform for themselves to manage their inventory, to manage their projects. But then once you start capturing all this data of what exactly is going to be needed, like how much steel is required next month to finish this project, then it becomes very simple to go and enable that transparency in the supply chain and open up a very transparent supply chain for the contractors and developers to buy from. And so this again platform helps enable these transactions that are powered by build supply, um, through their own supply chain. And so it's a SaaS plus transactions model again.
Fantastic. And now I believe because you have been able to figure out as a VC to partner with these companies where you think the commerce and the transaction market is much higher than the SaaS subscription market. You are repeating it, I believe, across geographies.
Yeah, exactly. So we are starting to do this across, let's say okay, so let's sort of step back and think, why did we come up with even this sort of a thesis? Like, why take such a twisted approach? And I think the answer, probably every VC and most founders already sort of understand, in emerging markets, it's difficult to get money from a pure subscription model from these businesses, right? And definitely, the geo movement that has happened in India has enabled like adoption and digitization of these SMEs. It's high time. It's beyond time, actually, I would say. And all of these SMEs are definitely willing to adopt and interested to adopt software, but they're still not ready to pay the kind of dollars that the Western market would typically pay for this kind of a software, right? And partly that has to do with culture and just legacy, right? And partly it has to do with just how much amount of money that they as business make and what kind of profit margins they live on, and just the bottom line that they sit on. It doesn't um, there's no scope, as there's not as much scope to pay for subscription, right? And because of this, it's just easier to solve this pain, either on the revenue side or on the cost side for the SME, and make some money on the transactions that they're anyway doing in the market. In fact, making them even more efficient on those transactions, and then charging them a small fee for it, right? So you can improve their efficiency, or you can increase their revenue by 4, 5x, 10x sometimes, right? And you can take 10% of it, and that's okay, like, because for them it's like it's much better than how things were before, right? So I think that way the friction becomes very less, and that is the reason why companies like Classplus have scaled so quickly. In 2 years, they've gone from 0 to 5,000 institutes without raising like much capital, right? Only now they've raised some $10 million, but before that they were working on like a few $1 million, right? And they've managed to scale so quickly because of all of this, right? So I think um, this sort of model of this Shopify model, if you will, works very well for emerging market SMEs, right? But if, let's say, we are focused on some more mature markets like Singapore or Japan, right? Like over there, both enterprises as well as SMEs are willing to pay for software. And over there, we might take a pure subscription sort of approach towards the market. And that's what we've done.
And how is Indonesia a market as compared to India in terms of SaaS adoption
Yeah.
and willingness to pay for SaaS?
So I think that's a great question, Siddharth, and something that we've asked ourselves a lot of times as well. Um, I would say the adoption is actually a bit similar to India, like it's just starting to happen. I think just like India had its own geo movement, like Indonesia has had not a telco-led movement, but more a tech unicorn-led movement with the likes of Gojek and Grab and Tokopedia and Bukalapak sort of opening up the market and educating the market towards tech, right? Like all of these platforms have 100 million plus sort of users, and the total population of Indonesia is around 260 million, and the addressable population from a tech VC perspective is maybe around 150 max 180 million, right? So significant amount of adoption has already happened on the consumer side, which is sort of seeping into the SME side, and now is sort of the best time to build these kind of SME digitization platforms, right? So from an adoption perspective, very similar to where India sits today. But from a willingness to pay perspective, it's very interesting. I think the willingness to pay is a bit higher than in India, thanks to sort of the higher GDP per capita that Indonesia sits at. But again, that there's a slight nuance. Indonesia is mostly led by micro businesses, and 98% of Indonesian businesses are actually micro businesses, which is less than 10 employees. So it's even more sort of, let's say, um, fragmented than India, right? And in that sense, like, those sort of businesses, micro businesses, the propensity to pay for SaaS is almost zero. And that's where, like, the transactions models work very well. And if you see, you know, the right now there's a wave of companies coming in which are sort of the Udan of Indonesia or Khata Book of Indonesia and these kind of companies, right? So it's very interesting, and that's what I mentioned at the start of the episode. We sit at sort of a bird's eye view of seeing all of this and seeing what is working in India and what makes sense and what doesn't make sense, and then applying similar sort of thesis to the Indonesian market, because from a tech wave perspective, they're probably 1 or 2 years behind India in terms of sort of the entrepreneurs and what they're building from business models perspective.
Fantastic. And as you mentioned, one of your startups portfolio companies, IOPOP, is similar to Khata Book in India, as it,
IOPOP, yeah, actually, IOPOP is not similar to Khatabook, but I would say it's a bit similar to BillDesk. Um,
okay.
yeah, so it's a biller aggregator in Indonesia, and they're the category leaders. They're the largest ones. So BillDesk, actually, funnily, that wave in India came, 10 years or so ago.
Yeah.
But in Indonesia, it only happened maybe when we invested in IOPOP, which was 4 years ago.
Yeah.
And so now we're starting to see billers getting digitized, thanks to IOPOP going in and sort of working with these folks and bringing them on.
Fantastic. And uh, tell us more about, the global companies which you mentioned, Hasura and Test
Hmm.
Sigma,
Yeah,
which are targeting global markets. Like, how do you evaluate these companies,
yeah.
and what are the key early metrics that catch your eye
Right.
in case of these
So
companies?
global SaaS is actually very close to my heart, Siddharth. And the reason is, like, my personal career has been sort of in global SaaS
Yeah.
almost all my life, right? I started my career building Office for mobile within
Yeah.
Microsoft. And, we deployed to over 10 million users at that time. And I learned
Yeah.
sort of firsthand going from zero to like 10 million users on one
Yeah.
platform with a small team of 50 devs,
Yeah.
so we really like enjoyed that experience, and that sort of brought me to the forefront of sort of SaaS, right? Like
Yeah.
local SaaS. And then I sort of helped build a similar platform out of Singapore, a company called Pi, that was sort of building a Slack competitor back in 2015 timeframe. And we were taking a very different approach towards collaboration. We were sort of targeting the non technical SMEs in the market. So, Slack seemed to be used and probably still is used mostly by the tech community. But Pi was focusing on sort of the non-tech community, schools, um, random SMEs like restaurants, etc., were using this platform for their team collaboration. And that was a vision, and we started growing and scaling, and then ended up getting acquired by Google. And at that time, I actually entered venture capital. So since that day, I realized that my personal experience is in tech and product and go to market for SaaS, global SaaS companies, and that's where sort of I've used my sort of learnings from these experiences in looking for the right kind of companies. And our journey in global SaaS actually started with Singapore, with a company called Healint, which is a healthcare analytics company, and so global in nature from day one. They serve like pharmaceutical enterprises with data analytics, and on the patient side, they have the largest sort of engaged patient base today with an app called Migraine Buddy, which basically tracks and predicts migraines for anyone who's suffering from a chronic migraine condition. And I don't know whether any of the listeners are migraine patients, but if they are, they most likely have used this app, especially if they are from a developed market, because they have more than 2 million users on the platform. So anyway, like our journey started with Healint, and then I led an investment into a Y Combinator backed company called Saleswhale, which is a sales AI company, which is sort of building this conversational intelligence platform for helping qualify marketing leads at scale. So, and it's all done via AI. So there's a sort of a bot that takes on the hat of what an SDR would do typically in a sales company, in a sales team. So the bot sort of plays the role of an SDR and qualifies the lead. And once the lead is qualified, it hands it over to the account executive to go and close. So that's an investment I led, and through that journey as well, I learned a lot about how to build and scale GTM for global SaaS companies. And then we invested in, I personally invested in two companies, HASURA and Test Sigma in India. And these are in the dev infra space within the global SaaS sort of bucket. And again, this is a space which is very, very close to my heart, because I come from a dev and technical background. And so I'm able to understand some of these platforms maybe a bit better than the average VC, because only when you actually build something yourself, you realize sort of the nuances of technology and code bases and stacks and technical stacks, and hence you're able to see like where a particular solution fits in. So most of our Indian global SaaS companies have been in the dev infra space, but very willing and very much looking to sort of diversify across other verticals as well, be it martech, be it financial tech, within the sort of global SaaS space, and so on and so forth. So that's been sort of our journey on the global SaaS side.
And in case of some of these companies, let's say Hasura and Test Sigma, what were their metrics at very early stage that caught your eye? And
Oh, okay. Metrics. So actually, Siddharth, like we're seed stage investors. So
yeah,
we are sort of, as I mentioned, we are the first institutional check into these companies. So when we meet them, forget metrics. Sometimes they don't have a product. So when I met actually the Hasura founders, they were building or they were planning to build a backend as a service. And at that time, they were running what we guys call like a dev shop. So they were
Yeah.
building some apps for some people, and on the side they were building this product. And I really found the team very interesting, and I found what they were starting to build quite interesting. But that said, I didn't invest in them at that time. So we
Yeah.
kept in touch for another 5 6 months because I wanted to see how they evolve on this platform and how their thinking evolves in the platform. So actually, when they came to me again after 5 6 months and we discussed, they hadn't reached any particular metrics in terms of customers or revenue or ARR or ACVs or whatever, right?
Yeah.
Um, all they had was maybe like a few beta users who were just starting to use the platform. But what was more important was a vision, right? Like now they had a vision that, hey, we want to make backend development easy for you know mid to high sort of experienced devs, right? So that was how their thinking evolved, and they learned like along their journey. And that sort of is what I invest in. Essentially, a, a team of rockstar founders, like amazing founders. And I can help. I can just clarify what rockstar founders mean for us. Like
Yeah.
I'll just do that. But basically, a very strong team going after a market that we really like, large market, as most VCs like, um, and with a very clearly defined vision, right? And the vision can be very broad, and that's okay, as long as we understand the founders will be sort of following this path and will be um, you know incentivized to follow this path regardless of the ups and downs that come in the journey. So the solution can pivot, the product can change, the go to market can change, but at least the vision will stay aligned. And sometimes vision can change also, but mostly we want them to have a consistent vision towards what they want to achieve or what they want to solve in the world, right? And so let me help like clarify what rockstar founders mean for us, right? And we have like a few qualities that we assess these founders on.
Yeah.
But the biggest one is what we call product led, right? So
Yeah.
I think unless the founders are product led, like we are unlikely to be interested in the company, right? These and from product led perspective, like it's very simple, right? Like we want them to be solving problems, thinking about product first, right? Like not thinking ops, not thinking manual, but thinking maybe initially manual, but always thinking how to automate like certain parts of the process that they're running, right? Like be it on product, be it on GTM, but having a very sort of user focused approach and thinking what is it that the user wants, and make like 10 users delighted with their product with a small MVP and just solve their problem and then iterate from there, right? So product led and that iterative approach is one big factor. The second factor is frugality, right? Like we want founders to be frugal in nature. We want them to do more with less, and we've seen this across our portfolio. Um, Only when you do more with less are you really building the right kind of company, and that's when you see massive successes both for the startups as well as for the VCs, right? Because the return on equity is the highest only when founders are using the resources in the best and most efficient manner, right? So that frugality doesn't necessarily mean being cheap, but what it means is like where should the founders be using the resources, the limited resources that they have. So that's the second part. And the third part is like ambition and hustle, right? Like we want them to be dreaming big. We don't want them to be thinking about a small 10 $20 million revenue business where they exit 5 years down the line. We want them to be going for the long run, for the IPO, for the M&A, which is going to happen only north of $1 billion, right? So having that sort of $1 billion ambition and having the hustle to get there, right? Like so that hustling nature and always being super ambitious. I think that's sort of the third criteria. And when we see these kind of teams, product-led teams who are frugal in nature and but with big ambitions. Like that excites us already, and for us, like metrics are irrelevant at that.
Fantastic. I think that's also a product-led team comes from your DNA as
Yeah,
being a core techie first,
yeah, I
and then
think it helps, right? Like I think coming from that background, I think it's just, one thing that my managing partner once told to me is like, VC is a job where you get to choose the kind of people that you want to work with,
yeah,
right? Like it's probably one of the very few jobs which allow you to do this, right? Like where every day you can decide, like, do I want to work with this person or not, right? Like, and even sometimes when you make mistakes within your portfolio, let's say you invest in somebody and you realize, 2 years down the line that this person was not the right person to invest in, and for whatever reason you don't like working with them anymore, you can just
yeah,
stop and move on, right? Like it's
yeah.
so easy, and that's the, I guess, the good part of being a VC. Like you can choose who you want to work with, and I personally want to work with the best sort of product and tech people in the market, in the country, in the region.
And within your portfolio, what are the early stage SaaS mistakes that you have seen your founder making on either on GTM side or on the product side, which you can share?
Oh, I think mistakes are a lot, right? Like there's not a single mistake that I would say everyone makes. But let me think, um, company by company. Um, so, for example, like one of my SaaS company based out of Singapore, I think they made a mistake of hiring like heads and VPs too early.
Yep.
Um, and as VCs, we are always pushing these people to build their core team, build the best sort of middle management, because you need to sort of you know move away from founder-led sales, etc., right? But I think one thing I've realized is that there's a time that you should bring these kind of VPs and head of sales and head of tech, etc., on board, and initially till that first maybe even $1 million, right? Like it should all be done by the founders. And if the founders themselves don't have the skill set to do it, then either they should learn it or they should bring another founder, co-founder on board who will be as incentivized as them to sort of make it happen, right? But it cannot be bought. This skill set has to be either learned or it has to be sort of shaped within the team itself. It's not easily bought, right? So I think that's a big sort of common, I would say, mistake that a lot of founders do, which is without going out and selling themselves in the market, they go and hire a head of sales and imagine that
Yeah.
it's all going to work out for them. It doesn't work like that, because that's not how sales works. Like it always has to be founder-led sales, at least initially, and usually till that first million, maybe even half a million ARR. That's okay, but to get to that point, like you have to be founder-led. So that's a common mistake. Um, I would say the second mistake is that founders don't think about GTM often enough. And I've learned this sort of the hard way um, within my portfolio that, even I personally used to think more from just a product and problem and product market fit perspective, but not thinking about as much about how to align that GTM with the product from pretty much day one, right? And these two need to be sort of hand in hand, because unless you have the right GTM strategy, it's also very difficult to find that product market fit, right? To discover that product market fit. And a lot of companies, they end up sort of straying all over the place. It takes them 2, 3 years to figure out exactly what is the right GTM strategy for their particular product, right? But I wish, like, and I recommend, like, any founders who are starting up right now or sort of in their early stages of journey, to start thinking about GTM and the different sort of approaches, different kinds of strategies that exist in the market, and which one would be a good fit for your kind of company, right? Because there's no one size fits all approach. Every company is different, every problem is different, every solution is different. So you need to find the right one for yourself, but try and do it earlier and sooner rather than later.
So, is there a playbook available on web where SaaS founders can look out for various GTM strategies, or is it by talking to the
Yeah,
people?
nothing that I've come across right now, because I think this also keeps changing, Siddharth, right? Like, I mean, the GTM pre-COVID is probably very different from
Yeah,
GTM even post-COVID, right? So I think like it changes every 6 months, I would say. The market changes, the channel changes. Like the reason why it changes is because the channel changes, right? Like, and the latest buzzwords change, right? Like at some point right now, let's say, let me tell you about a specific example. Within martech, right? Like
yeah,
you, let's say you were building a martech solution. um, you know Probably 12 months ago, you would have talked about lead generation, closing velocity, um, even things like expansion and, inside sales and content-led strategy, etc. Right? Like sort of the HubSpot methodology.
yeah,
But now it's all about what they call demand gen. Right? So the buzzword has changed from lead gen to demand gen. Why? Because it's like it doesn't matter whether you have a lead, but you need to have a qualified lead. You need to know
yeah,
whether there's real pull, whether there's demand. Otherwise, you'll be wasting your time sort of trying to close a customer that's not going to close, right? Then, secondly, the channel changed, right? Like channel used to be content, blogs, etc. earlier. Now there's just so much of noise in that space that
yeah,
channel has moved to webinars, right? Like webinars are the new sort of blog, right, and podcasts, right? So I think the channel change, so your whole strategy needs to change, right? Like how much effort you put in into doing webinars. Do you do 12 a year? Do you do one a year? Do you do one big conference where you pull in like a lot of resources? You pull in a lot of heavyweights from the industry. You dump a lot of capital into building that sort of brand for that one event, or do you do like small niche events once every 2 weeks, with a close set of 10, 20 users or customers or potential customers? So again, within the webinar, like there are multiple kinds of strategies that a founder can take, and depends again on company to company which is the right way. So unfortunately, there's no one
yeah,
resource, like, but I think if you follow the right sort of people on Twitter, or just listen to these podcasts, your podcast, or there's some SaaS specific ones, those are best places to sort of be up to date with how people are thinking, and then you can sort of devise your own strategy. And that actually is the moat. you know Most of the people, they think, my product is my moat, my data is my moat. Actually, if, and this is something that A16Z wrote about also
yeah,
recently, that your moat is your GTM.
yeah.
Your moat is like the channels that you build, the sort of capabilities that you build on going to market, rather than any data that you're collecting.
And can you share a few, examples from your portfolio, or even just one example from your portfolio which you loved on GTM?
Hmm. Yeah, this one is actually very close to my heart, because, as I said, like, I'm a developer by training, and I love sort of dev tools in general. And so Hasura, I think they came up with this GTM somewhere sort of a couple of years into their journey, right? And when we invested in them, like they did not have this GTM in place, but they came up with this unique open source led GTM, right? And within DevTools, I think one thing I've realized is that there's a lot of power in this open source GTM, right? Again, it comes with its pros and cons, but for a company like Hasura, which was trying to sort of get mid to high tier sort of developers onto the platform, it was very important to get that initial mind share from the top tier devs, right? And get sort of the KOLs to um, testify that yes, this is the right platform, this is the right way to build your GraphQL APIs. And I won't bore people with like what Hasura is, because unless you're a geek, you'll probably not be very interested. But you can go check them out on hasura.io. But one thing they realized was that they need to get these KOLs to sort of give lend credibility to their platform. And the best way that they discovered during the journey to do this was by taking an open source led approach. So, open source was sort of in their DNA from day one because they wanted to be open source. But what really propelled them to go open source was opening up this new sort of GTM strategy. And it worked beautifully, right? Like, I think the day they went open source, suddenly there was a buzz on Twitter, and people started looking at it. And then a few good, like top tier devs, sort of got hooked, and they started experimenting with the platform. They liked what they saw. They started tweeting about it, and that sort of had a waterfall effect. And that effect has continued till this date, right? And this was started around a year ago, and from zero they went to 17,000. I think now 18,000 GitHub stars, which is a lot, right? Like, I think if I'm not wrong, Kubernetes total has some 30,000 GitHub stars. So, like, that shows you like how big and how massive they are in terms of adoption already in just a year, right? And this was all done thanks to open source, thanks to a lot of open source devs sort of picking on the platform and sort of building on top of it, as well as tweeting about it, as well as sort of sharing it within their communities. And that sort of GTM, I've really enjoyed sort of being on the sidelines of and watching it grow, because this was something that I'd never sort of done before. The only experience I had with open source was with a short sort of internship I did back in my college days with Mozilla. And I'd seen sort of how tight that community is. And so, bringing that whole open source community approach towards your GTM, I think I really like that sort of strategy. And I realized that the power these days, or the right sort of GTM these days, is mostly built on the lines of a community. And pretty much every company in the market has to now go and build a very strong community along sort of the core set of users who become sort of the voice of the company, who become both opinion givers on the product side, as well as bring in the virality towards the GTM by bringing more people into the community. So that sort of open source community led GTM is something that I really love. Yeah.
Yeah, that approach, Postman has already been the
Yeah.
pioneer.
Yes. Yeah. Fabulous
That,
company, by the way. And
yeah.
I'm very, very glad that we have that kind of a success coming from India, which attracts attention towards this segment, brings belief from external as well as domestic VCs into this segment within them.
How much importance you put on revenue? Let's say from that point of time you put in your check. Let's say when you are in a company, what's your goal of uh, getting them onto a 1 million ARR, and then from 1 to 5 million ARR? What are the key things? I know it's a different advice for different company, but what are the key things you have in focus to get them at least to a 5 million ARR?
Yeah. So I think firstly, for us, the biggest priority is engagement, right? Like, even more than revenue, we want to make
Yeah.
sure that those early set of users are highly engaged on the platform. They're using it daily, monthly, weekly, whatever is the right sort of use case for that company, right? So that's the first sort of focus. And once these companies start achieving that kind of engagement, that's when we start thinking about monetization and revenue, etc. Right? And of course, like from a seed VC perspective, our target is always to help the company get to $1 million ARR, right? Like, that's sort of the golden sort of milestone, like that sort of big sort of line that you need to cross. And only once you've crossed $1 million ARR, like, that's when you really know that you're onto something, right? And I think the speed at which a company crosses that $1 million line from zero to one, that also gives us an indication of, like, how solid is this business model, how much is the real demand in this kind of market. But that said, like even if a company is relatively slow in going from 0 to 1, that's still okay, because fine, like it might not be a massive $1 billion company. We are okay with a 200-300 million dollar outcome, right? Like you just go, as long as you have your financial sort of cost base structured with a slightly slower growth, it's okay, right? But from our perspective, we are always eyeing that million.
Yeah.
Once we cross the million, then of course the next milestone is 5 million, right?
Yeah.
And we definitely help the company go from 1 to 5. But I think the biggest sort of role that we personally play is more in the 0 to 1 sort of journey. And that's because I personally have built sort of that journey before, like twice. And because I've done it twice, like I feel that I've seen at least some sort of, pitfalls and some sort of hurdles that you need to jump across, like to be able to get there, right? So I think that's where I spend most of my time with the companies. Once they're beyond a million, I think I reduce my time spent with the company. Um, Not saying that it goes down to zero, but it definitely goes down to, let's say, half of what I was probably doing earlier. And then, I make sure that, I'm touching base enough and I'm helping these companies enough to go from 1 to 5. And at 5, I'm sort of, okay, my time is better spent on the next set of
Yeah.
companies which need that, same sort of growth, right? And, anyone who has crossed a 5 million ARR, I think after that, like they're set in their trajectory and they don't really need me.
So, Nikhil, and just concluding the podcast on your personal side, you have been a techie, a geek from Delhi Technical University. Am I right?
Yes, yeah. Back in the
And
days,
then
it was called Delhi College of Engineering.
yeah, and then you worked as a dev, as you shared with
Yes,
Microsoft. You built a company, TommyJams.
yeah.
Then you worked in Pi, which was acquired by Google. What
Yeah.
made you shift to VC side? Like it's a very different path for a techie to go into VC, and that too not in India, in Singapore.
Yeah. So Pi was actually in Singapore. So I was already in Singapore
Yeah.
back at that time. What made me switch to VC was lack of options, Siddharth. So when Pi got acquired by Google,
Yeah.
um, I was actually working with them while I was doing my business school. Um,
Okay.
and so when my plan was, that right after business school, I'll just go and, work with them. It was a fabulous team. I loved the team.
Yeah.
We were growing very quickly. And my plan was, this is good, because that's what
Yeah.
I'd come to Singapore for, to get sort of that a bit more broader experience,
Yeah.
international experience. And so this was perfect for me. We were going at the US and EU and sort of developed markets. And I was learning a lot, right, on GTM and product and success, customer success.
Yeah.
Um, but then Google acquisition happened, and at that time I decided, I've already been on sort of a large corporate journey, and one of the big reasons I came out from Microsoft was because I realized, like, I'm one of the 50 devs who's coding Excel, who's coding Office, and even though that's great, like, there are 100,000 more similar people to me in the company, right? And I'm just one of those 100,000 people. And I realized that, if I really want to have a big impact, or sort of realize my personal ambitions, then I have to sort of take a bit more riskier path, which is a bit less traveled, so to speak, right? And that's why the Google sort of role never really excited me. And at that time, I decided it's time to try something new, but I
Yeah.
couldn't think of a new idea that I can start my own company here, or could not think about another company that I would want to join at that point. And so at that instant, I said, what, like venture capital is something I've always been interested in, because I sort of come across a few VCs during my TommyJams time frame, and I was
Yeah.
always very curious. We were a bootstrap profitable company, so I was very curious, like, why do VCs do what they do? VCs have a certain way of behavior, so to speak, right? Like you can
Yeah.
sort of smell us from afar. And so I was very curious, like why do they all have this sort of FOMO in them, right? Like why do they invest, or take so much risk at such an early stage? So there were a lot of these kind of questions in my head. So I said, okay, why not? Why don't I join, a fund for a bit of time before I think about what next? And so that was sort of the reason that I started venture capital with. And funnily enough, like 3 months in, I realized like this was the best thing ever. Like, and I like being on this side of the table even more than the other side of the table. And
Yeah.
as a founder, you're sort of, or as an operator, you're heads down in one particular problem all day, maybe for weeks, right? But as a VC, you're just living so many different problems at the same time, right? And you are just so much of context switching, going from one problem to the other, and sort of that engineer in me was just got super excited by seeing all these problems like in the portfolio and saying, oh, why don't I go fix that fire and then this fire and that fire, and how do I help grow this company while I'm doing this like thing on the side. And I really like doing multitasking, actually. I know some people hate multitasking. I love multitasking. I enjoy it. Right? And so I really found my place over here within the first 3 months and realized that probably never going to switch back to a founder.
Fantastic. Thank you so much, Nikhil. It was wonderful to have you on 100x Entrepreneur Podcast. And thank you for sharing your journey, your insights.
Thanks for having me, Siddharth. Like I've always been on the listener side. I think it was my pleasure to be on the speaking side this time, and I hope that it's of help to some founders who are building, a global SaaS or a local SaaS company.